Hello, everyone. This is Doc again. It's been a while since I did a morning walk with the doc. I have been busy because I've been studying for an exam, and believe me or not, even in my late 30s, you still got to take exams at times. So, but this is something different. I've been actually trying to take the CFA exam, which is a certified financial analyst. Although I'm a physician, it is something that I have been interested in and reading a lot about investing and all. I thought, maybe I should formalize my skill. So I signed up for it. It's not something that's imposed upon me, but today I wanted to spend more time just talking about like an investment case that I have been working on. And actually, I do own stock in this company, but I wanted to discuss this with y'all and see if you had any inputs, and please feel free to put them in the comments. So, as we know, the geopolitical situation and everything going on geopolitically has been nothing short of, I don't know, crazy. But I mean, begins to, it makes you wonder, what what are the implications in the long term? We know that supply chains were pretty efficient but fragile. There were several single points of failures. COVID sort of exposed it, and there's been decades of underinvestment in several areas. And when we talk about areas, rare earths is one of those areas where there has been decades of underinvestment. More than 90% of the rare earth processing happens in China. And then that leaves the United States quite vulnerable to supply chain disruptions. In fact, we are seeing those disruptions now with the heavy rare earths. And that's why I wanted to talk to you all about Aclara Rare Earths, which is a company listed on the TSX Ventures Exchange. It is a company that has two deposits, and they are the finest kind of deposits, similar to the ones that you find in China, the ionic clay rare earth deposits. So essentially, these are easier to mine compared to the hard rock deposits, such as the ones we have in Texas, and they tend to be more economic. And this is just from the research that I have done. So I have a position in Aclara, so please keep my bias in mind while you review this with me. So I'm looking at the geology. From the geology, this company tends to have like two deposits, one in Brazil called the Carina project, and one in Peru called Chile, sorry, one in Chile called the Penco module or the Penco deposit, which is a smaller deposit. And they have done extensive metallurgical studies, so the metallurgy is quite de-risked. They did these studies in 2024 to 2025, and they're continuing to improve on the metallurgical standpoint. I also noticed that the share structure was quite solid. When I looked, Hochschild Mining, where Hochschild is primarily a silver miner, and although there are silver mines, pure silver mines tend to be rare, but they are known as a primary silver miner, but they do mine a lot of gold as well. Hochschild family has been in mining business for more than 100 years, and it's an incredible company. It's listed in the London Stock Exchange. So this was, if I'm correct, this was spun out of the Hochschild Mining company. And Hochschild Mining owns more than 50% of the company. Then there's an iron producer from Chile, CAPSA, that owns about 10% of the company. And specifically, they own 20% of the module in Chile, which perhaps translates to 10% of the company. And they have an option to acquire like 40% of the module in Chile. So they have a strategic partnership with a very well established large cap company in Chile. So if you look at the share register, the strategic investors or the insiders own a huge chunk of the share structure. And that leaves a very small float for anyone, retail investors or high net worth individuals who are not directly involved in the cap table to participate. And I see that a lot. The stock has a lot of volatility. It goes up like 10 to 20% on a normal day, like not every day, but there have been days when it goes down by 10. But then I looked at the second level 2 data, and the level 2 data basically shows like how thinly traded it is. So it is quite illiquid. So that's something to keep in mind, especially if you want to establish like a strong position. Again, moving forward, just to remind you, a disclaimer: none of this is financial advice, and this is just me talking to a bunch of friends who are listening to me. This is not a solicitation to buy or hold a security. And as I'm pretty big on biases, and I have already told you that I own the stock, and it is to my benefit, or at least subconsciously I want the stock to go up. But this should never be a reason for anybody to buy it. You should always do your due diligence. Uh, Now, we talked about the cap structure and the share structure. In terms of development phase, it is in a feasibility study stage where they have done pre-feasibility work on most of their projects. Some of the projects are currently undergoing the pre-feasibility study, but mostly I would say like they are in that feasibility study range and approaching towards a construction decision, with possible construction expected next year and completion by the end of next year. I would, I would add like 2 quarters to like any of these estimates, because these things tend to have delays. Usually when I'm evaluating projects, I also like to inflate the capital expenditure that they say are operating expenses by 20-25%. And I also like use very conservative numbers for a commodity price or the profitability. So I assume a lot more conservative numbers than I should, or I don't know. It's just good to be prudent with those things. Uh, and tend to round off the numbers that they say. So if they say like 120 million to develop something, I would say like 150. Um, so when we look at the projects, the Carina project in Brazil has had a feasibility study done. They are expecting environmental permits, uh, but it's still in process. So ideally, they expected by the Q3 of 2026. And please cross-check all of this information. I could be wrong, and these things do change. They're also anticipating development start in the second half of 2026, with construction permits expected by Q4 2026. The capital expense for this is around like 750 million, and I usually round it off to the higher number. So if it said like 720 or 740, I'll round it off to 750. And these generally tend to run higher than their expectations. The Penco module in Chile has a lower capex though. It has a capital expenditure expected around 150 million. And the company is like very aggressively trying to push this module forward. And when you look at it, it makes sense. It's a lower capital expenditure that can get them into production. They are expecting their permits in Chile I think the environmental permit is expected in the second quarter of 2026. So that's a big, catalyst to watch for. Along with that, they're positioning themselves as like a vertically integrated or vertical producer of heavy rare earth magnets. And they're setting up a processing plant in Louisiana. I believe it's in Lake Charles. I could be wrong, but double check. It's near a port, and so it's one of those cities, probably most likely Lake Charles, but perhaps it's Baton Rouge, but something y'all should look at. And they're also setting up next to the separation plant. They're also setting up a magnets facility, which is basically going to be making these alloys, which can be sold to these magnet makers like VAC, who basically do who basically make the final magnets out of it, which the car makers, etc., like Tesla, etc., and all these big car manufacturers, robotics manufacturers, drone manufacturers, they all need these magnets. So those are made by a few companies, and I think VAC is a German company that specializes in that. It's a very specialized field. So there's not a lot of companies that are doing it. TDK does it, VAC does it. VAC is a German company that's really, really established in that field. So, they're basically trying to make the alloys to be able to supply VAC. Uh, and then what else? So I looked at like development and catalyst milestones in 2026. So they're basically going to be developing both these pre-development or pre-construction work in 2026, and their environmental permits are expected. So the next 3 quarters are going to be around those catalysts. And 2027 is when the construction begins, and that like sort of starts the anticipation that this project is coming online, and it creates a lot of excitement. So you see, in general, like if you look at the pre-production sweet spot or the golden runway, uh, you know, concept, which is applicable to a lot of mining projects, you do see share price appreciation during this time because the projects are being de-risked and moving closer to production. Some risks, most of these projects, like they can have a lot of risks. I mean, one is the risk of like cost overruns. you know I mean, what if the construction costs, etc., or development costs go so high that it doesn't work? What if this is a niche market? What if the demand craters? What if China floods the market with so much supply that it becomes untenable? um, they don't have an offtake agreement so far. So, having an offtake agreement would be another thing to look at, because that sort of de-risks the project as you have like a buyer. The U.S. Development Finance Corp gave them $50 million to do their pre-feasibility feasibility studies, but that's not a huge amount. That's a small amount. And then there's less of, I think, a financing risk because it's backed by like two large companies who can pretty much finance this if they want to. But that's another thing to look into. What else to look into is like competitors. When it comes to competitors, the U.S. government has announced wanting to back, I think, a couple of projects in Texas, but they are a different kind of deposit. And I'm not sure if that was a definitive announcement to invest in those. But again, those stocks saw like super high share price appreciation. So it's not necessary that if a project is good um, or anything like that, that the share price would be commensurate, increase would be commensurate with that. So that's another thing to look into. Just because you invest in something doesn't mean that it would go up. You could lose a lot of money. So that's why it's important to do your own due diligence and treat these things with a great deal of skepticism. So what else? What else? Now I know that they're going to be bringing their like feed for their plants in Louisiana from Brazil. I don't think these are tariffed, but like, what if like there are like any restrictions on imports and stuff like that? So, regulatory and governmental risks, you always have to keep them in mind. Social risks, like in Chile and Brazil, what if the local community is opposed? I don't think that that's an issue. But these, who knows? Like, I haven't been on the ground, so like it's important to look at like things that could like tank a project. Um, and although they've done a great deal of de-risking, this is a pretty de-risked project. So yeah, so I am long. Uh, I also looked at like some of the comparables, like what other companies to look into. If I was just filtering it based on like the type of deposit, then I'm left with companies with ionic clay deposits because these tend to be more, what you say, like economic. And then there's another company in Brazil called Meteoric, which is also pretty interesting, actually. I've been reviewing their pre-feasibility study, and that appears to be an interesting prospect. But Aclara is more further along than Meteoric when it comes to development, and the premium in the market cap, I think, is justifiable. But that's just what I think, and none of this is investment advice or anything. What else? But that would be like the second project, like the other project I would seriously look at. It's an interesting one. Uh, then there's an uh, ionic rare earths. I think it's a company that has a deposit in Uganda, but the deposit's not very. It doesn't seem like they have the same amount or the concentration of rare earths as the Brazilian deposits or the South American deposits do. So, and then they have like a recycling facility in the UK. It's an interesting company listed on the Australian Stock Exchange. Something to look at. I looked at it just because it was interesting. And then the other ones were like hard rock deposits, so I didn't pay much attention to them. But, like the Texas deposit, uh, perhaps the government wants to invest into something that's like on land. And although Aclara has its processing in the US, maybe, they also want to mine in the US, or they want to prefer companies that mine in the US. But this is a company that doesn't require government support, not support, like, government to subsidize them. Their production costs are going to be slightly higher than the Chinese producers, but at the same time, they're going to be able to compete with pretty much most of the other players in the market from the preliminary numbers. Again, I think that should be enough for today, but that's what I've been thinking about. Leave me a comment and let me know what you all think. Thank you.